All right, we're back. Prohibited practices. What can you not do? The credit repair industry is regulated by the FTC, the Federal Trade Commission. The FTC has a law called the Credit Repair Organizations Act, or we refer to it as CROA, C-R-O-A. You'll see the word CROA in a lot of the training materials and where you're going to need to sign that you're very aware of the prohibited practices, specifically the ones I'm about to specify in this video, and also the Code of Ethics is going to mention CROA, that you agree to comply with all legal regulations that have to do with credit repair, and that you are, yes, that you're acting ethically and honestly, that you're not over-promising and under-delivering, which is, oh yeah, everything's going to come off your credit report, just buy the system. Okay, that's a prohibited practice. There's really only two main issues addressed in CROA. Is number one, do not overpromise and overdeliver. There is no magic wand. There's no magic dust. There's no magic Harry Potter thing that can just make everything negative just vanish off of a credit report. It cannot happen. I've seen it hundreds of times happen, but that's not because there's any magic wand, and you almost can't promise it. If you promise somebody everything's coming off your report, then Murphy's Law will kick in and nothing will come off. I mean, I've had account managers and salespeople on my team. I've heard them promise things, and I sometimes would look. There's no magic to make that foreclosure come off of a credit report. There's no magic to make the 3 repossessions come off the credit report. There's techniques that involve verification and validation, but you can't, just saying that's not mine isn't going to get the thing off the report. It'll come back, it's verified, and then you've already used one of the disputes. You cannot say something that does not belong to you if it does. There are ways to, I don't see a repossession. I'm not as concerned with that repossession being on the credit report as being legitimate. I'm concerned with, was the car repossessed illegally? Now we'll get into some details of what I mean by that, but the bank has to follow certain steps before a repossession can even happen, and we'll get into that. It's state specific and bank specific and lots of specifics, but you cannot promise, okay, if you sign up in credit repair, that repossession's coming off. That $10,000 Capital One credit card that you went off of a cliff and it's now in default and charged off status and negative $10,000 past due balance. Oh yeah, if you sign up in our program, that's going to go away. No, most likely we're going to end up having to negotiate that for about a 50 cents on the dollar settlement. Okay, and again, we're getting ahead of ourselves here. It isn't just going to go away. Now, when it gets sold, charged off, and goes to the food chain of debt buyers who buy these debts, then that's another, for pennies on the dollar, then that's another whole different story about a lot of this stuff. Age of debt. If it's time barred, it cannot be sued upon, meaning they can't be sued and get a judgment and a garnishment against you, then that's another whole different situation. How is that reporting on the credit report? But you can't, there's differences in how we do what we do, but you cannot say, oh yeah, we'll get everything off the credit report, because you can't guarantee that. Oh, we'll get your credit score to 700 if you sign up. Another thing, we can't guarantee a credit score is going to move. We can't guarantee a credit score. If they're a 550, oh, if you sign here, we'll get you to a 750 or 600 or whatever. You can't promise we're going to raise a score. Because here's the thing. All of a sudden, what if everything is on the credit report comes off? Now they have no credit. Then they don't have a credit score at all. And they're going to come to you and say, I thought you said I was going to be a 650 and able to get this house that I've wanted. Our program is a mortgage readiness program. Again, more about that, more into the training. Our goal is to get the person mortgage ready. And so in all the dynamics of that, we have to increase lines of credit. In some cases, we have to add new revolving accounts, which we have to add possibly authorized users. They have a family member, they can add them on as an authorized user. We have to add new pieces of credit, which is all part of the system. We have to make negative information be accurate and verifiable. We have to do a lot of different things, but you can't promise that their credit score will go up if they enter the program. In 99 out of 100 times, the score goes up by coming into the program. And you can say that. Or you could say, look, if you come into our program, most likely you're going to have an increased credit score. But if you follow our steps, you will become mortgage ready. And that's going to be underwriting guidelines of the mortgage company the application is submitted through. Not because it's a certain score. You'd never get into the box where you said that we would have a 650, 700 credit score if we sign up in the program. If you said that if I sign up in the program that my 2 bankruptcies are going to come off. You said that if I sign up in the program, the foreclosure and repossessions are coming off. And all these charged off credit cards are going to vanish in thin air. Okay? If someone's currently past due 2 payments on their car payment, and they see a tow truck drive by, and they start getting nervous, no. We can't make that stuff come out of past due. We don't have the money tree seeds. We are not consumer credit counseling, okay? Do not overpromise and underdeliver. Know what we do and what we can't do. We fix errors, inaccuracies, obsolete, unverifiable items on credit reports, and we help the customer build new lines of credit in order to maximize the score. That's what we do. Don't imply that we do anything other than that. We're very, very, very good at what we do. And in most cases, if they follow our program, they will become mortgage ready. If they participate, if they do what needs to be done, if they keep their credit monitoring subscription active so we can see and monitor the alerts and the new reports on a monthly basis, all that helps move through the program. If they follow our program, they will become mortgage ready. That is our program. Do not overpromise and underdeliver. Second, we cannot charge before services are performed. Okay? This is important. We cannot charge before services are performed. If the customer wants to prepay their account from their tax refund, we use an escrow account. Okay? You are paid monthly fees from the escrow account for previously performed services. The first step is a full credit report audit, analysis, and creation of a written action plan. That's what the $199 single price is for. The creation of a written action plan provided to the customer, and then the $199 is billed upon completion and delivery of the action plan to the customer. That's worth more than $199, but that's our price point. We want to help as many people as we can. Monthly services are for previously performed work. We do the work and we bill in arrears. If the customer has to have the choice to cancel their account at any point. 5 days after sign up, they have the option to cancel the account and receive a full refund. So we wait 5 days before doing anything. Once that period is done, we provide them with the action plan, which most likely has already been completed at that point. Then we bill the $199 or the $249 for a couple. Then we do the work. Then in 30 days, we bill in arrears. If they opt to not escrow their case, which we average a 6-month case cost, we can't guarantee it's going to be completed in 6 months. It might not be. It might take longer, and then we would go on a month-to-month program until the case is done. But each month they'll have an audit, analysis, and a new action plan of what was done for the previous month. And upon deliverance of that, then we bill the monthly fee, either on an auto bill cycle or from their escrow account. So, do not overpromise or underdeliver, and we cannot charge before services are performed. These are the two big parts of CROA, the Credit Repair Organizations Act. And those are the main prohibited practices.